All right, let's dive right into a huge choice that every single investor has to make. Picture two people, okay? Both are trying to build wealth, but they're taking completely opposite paths. The real question is, which one of those paths is the right one for you?
Just think about that for a second. Our first investor is literally getting paid. Cold, hard cash lands in their bank account year after year, no matter what the stock market is doing. And the second investor, they get zip. Nada. Not a single dime in cash.
But here's the twist, and it's a big one. Somehow, the person who gets no cash along the way often ends up way, way richer in the long run. Now, how on earth is that possible? It feels totally backwards, right? Well, that's the puzzle we're going to solve together today.
So let me just ask you, straight up, if this were you, which one would you choose? Would you take the consistent cash payments right now, or would you bet on a much bigger payday down the road? And this isn't just some random question. Your answer could literally define your financial life.
You see, this is about so much more than just picking a few stocks. This is a choice between two totally different ways of thinking about money, and each one leads to a very different kind of future. We're talking about dividend stocks versus growth stocks. And by the time we're done here, you're going to know exactly which one fits your vision of the future.
So let's start with investor number one. The best way to think about dividend investing is to imagine you own a fruit tree. Every single year, that tree produces fruit. You can pick it, you can eat it, you can sell it. It's real, it's reliable, and it provides for you consistently.
So what exactly is a dividend stock? It's actually super simple. You own a tiny piece of a business, and when that business makes a profit, they decide to share some of it with you, the owner. They literally just send you cash. That payment, that's your dividend. And what's really telling is the type of companies we're talking about here. These aren't the flashy brand new startups you see in the headlines. Nope, these are the big, established, maybe even a little boring giants. Think about your bank, your power company, your cell phone provider. They've already had their explosive growth phase. Now it's all about being a stable, cash-generating machine and rewarding the people who own them.
So here's the core trade-off, and you really need to get this. The massive advantage is that consistent income. It's a huge psychological comfort blanket, you know? Even when the market is crashing, you're still getting paid. But here's the flip side. Every single dollar they send to you is a dollar they can't use to grow the business. They can't reinvest it to make the company bigger, faster. And that naturally means slower growth overall. Okay, now let's switch gears and look at our second investor. If a dividend stock is like owning one fruit tree, well, a growth stock is like planting a tiny little sapling with the dream that one day it will grow into an entire forest. You get zero fruit for a long, long time, but the potential upside is just massive. A growth company takes every last penny of profit and slams it right back into growing the business. They're hiring the best engineers, they're building massive new data centers, they're launching in new countries. It's a very deliberate choice. They're sacrificing giving you a payout today for the chance to completely dominate their industry tomorrow. And you can see exactly the kinds of companies we're talking about here. They are on the absolute cutting edge. We're talking tech, artificial intelligence, e-commerce. Their whole identity is built around one thing: speed. They are obsessed with growing revenue as fast as humanly possible because they believe that if they grab the market now, insane profits will come later. So here's the other side of that coin, the big trade-off for growth stocks. The advantage is just mind-blowing potential. Seriously, these are the kinds of investments that can turn $1 into 5 or even 10. But the disadvantage is the whiplash. The volatility is intense. What goes up like a rocket can come down just as fast. And because there's no dividend check coming in, you feel every single dip. The only way you make money is if you eventually sell. Okay, so we've laid out the two paths. You've got the steady fruit tree, and you've got the fast-growing forest. Now for the most important part of all, figuring out which of these paths, or maybe a mix of both, is the right one for you. Let's just boil this down to its simplest form. Dividend stocks, their goal is to pay you today. Growth stocks, their goal is to pay you a whole lot more, but later. It really is the fruit tree versus the growing forest. One gives you a harvest right now, the other promises you a vast timberland in the future. And please, please hear me on this one. It is not about which one is better. There is no right answer. Anyone who tells you that one is always superior to the other is completely missing the point. The only thing that matters is which strategy fits your goals, your personality, and your stage in life. So let's ask the tough questions. First up,
Do you need income from your investments right now? Maybe you're retired or getting close, and you need that money to help pay the bills. Well, if that's you, that steady cash flow from dividend stocks is going to look pretty amazing. But if you're years or even decades away from retirement, maybe you don't need that cash today.
And that leads right into question 2. How old are you? Look, the younger you are, the more time you have on your side. Time is the secret ingredient that lets that forest of growth stocks really mature into something special. You have decades to ride out the ups and downs. But as you get closer to needing that money, the stability of that dividend fruit tree starts to become a lot more valuable.
And you've got to be brutally honest with yourself here. How would you react if you checked your account and saw that it dropped by 30% in 1 month? Would you panic and hit the sell button, or would you be able to stomach it knowing it's just part of the game? If those big swings are going to make you lose sleep at night, then a strategy heavy on dividends might give you the peace of mind you need to stay invested for the long haul. Now, here's the really good news. You don't actually have to pick just one path. In fact, the savviest investors almost never do. They build a portfolio that cleverly combines both, and they tune the mix based on their answers to those questions we just asked. Let's look at what that might look like. So for someone who really wants that stability in income, maybe a retiree, a conservative portfolio could look something like this. See that? A huge chunk is in dividend stocks, acting like a solid foundation that kicks off cash. But there's still a smaller slice in growth, just to make sure their money keeps growing over time. Now, here's a more balanced approach. This might be perfect for someone in, say, their 40s or 50s. You've got a good-sized chunk in dividends for that stability, but the majority is still in growth stocks because you're still focused on seriously building wealth for the next 15 or 20 years. And finally, for the young investor, someone with tons of time and a high tolerance for risk, you'd see an aggressive portfolio like this. It's almost all in on growth. The small dividend slice is nice, but it's not the point. The entire goal here is to maximize that long-term growth, to let that forest get as big as it possibly can. And this right here is probably the single most important lesson of all. So many people get obsessed with chasing the absolute highest returns, but that's a mistake. If you build a portfolio that's so risky it scares you into selling at the absolute worst time, you lose. The best portfolio isn't the one that looks best on paper. It's the one you can actually stick with, year in and year out. So let's end on this one simple idea. Think of it like this. Dividend stocks help you survive the journey. They give you the stability and the cash flow to stay in the game when things get rough. Growth stocks are what help you build real, life-changing wealth. The people who really win at this aren't married to one strategy. They're the ones who understand that these are both tools, and true success comes from knowing exactly when and how to use each one to build the future they want.